I think the single most important thing to understand about Bitcoin is the first decentralized, truly digital property in the history of the human race.
Bitcoin transcends any company, any CEO, any country. It's spreading everywhere, and it truly is the most successful decentralized technology.
Bitcoin is hope. Hope to fix your business, hope to fix your family balance sheet, hope to fix your country. If you want to preserve your wealth, you spread your bets around. But if you're going to diversify in this environment, I think you want to diversify into scarce assets that cannot be devalued based upon currency expansion. When I saw digital property, I thought this is the next big thing. The best thing to do is if you're not gonna hold it for 4 years, don't buy it at all. Because if you're thinking shorter than 4 years, you're kind of more either a trader or a speculator. The best period is forever, and if you can't be forever, look out 10 years, and then you won't have the anxiety. Right, so this is the most successful thing ever unleashed in the history of humanity from an economic point of view. So I think that as time goes by, there are just more and more ways to buy Bitcoin and buy instruments and financial products that are backed by Bitcoin. All of those are going to create more demand for the underlying asset. First of all, Bitcoin is the solution to the problem because it is the apex property. You can't inflate it away. It's a global monetary network for people that want to store their economic energy for the next 100 years. I think that the right way to think about Bitcoin is, and people get this wrong all the time, Bitcoin's not a stock. Bitcoin is a bank. Because the macroeconomics are very favorable, right? We know we're going to continue to expand the money supply in dollars and euros, and everywhere else in the world. The technology dynamics are very favorable. We keep improving Lightning apps, Square, Cash App, mobile apps. You've got these, like BlockFi's got a credit card and it gives you Bitcoin as 1.5% cash back. Call it Bitcoin back. So all those things are rolling out, and as those things roll out bit by bit, the entire asset class will just get more energy flowing into it. Right, and first we did a $250 million purchase. The strategy is acquire and hold Bitcoin. It's like, if you could buy 50 blocks in Manhattan 200 years ago, there's no way you wouldn't have made money unless someone called your loan and liquidated you out and you had to sell at some time in the last 200 years. So you just want to have the staying power to stick around for the long term and let nature run its course. You're seeing the bigger banks, Goldman Sachs, and Morgan Stanley and others getting involved. The Bitcoin derivatives market is growing. So ultimately, the Bitcoin price will be volatile. I watch it. If a decade from now it didn't go up, it won't have been the best strategy. But what it does day to day, week to week, month to month, even year to year, isn't really that relevant. We have a long-term strategy here. If you want to give music to 8 billion people, you got to give them digital music. And if you want to give education to 8 billion people, you need to give them digital books and digital education. And if you want to give wealth to 8 billion people, you need to give them digital property. So Bitcoin is profound in the same way that streaming music and YouTube is profound and iBooks is profound. Except that those things I just named created trillion-dollar companies. Facebook, Google, Amazon, Apple all became trillion-dollar companies because of digital books and digital education and digital music. Digital property is 100 times more important. Because what you're going to see is $200 trillion of money drain out of land and stocks and bonds and currency and collectibles. And when we demonetize $400 trillion worth of property, and half of it flows out. And it's just like we took the information out of the books and libraries. We took the music out of the orchestras and the pianos and the CDs. What happens when we take the money out of the property and we put it into the Bitcoin blockchain, and then we hand that to technology companies to do with as they will? The right way to think is, again, it's electricity. Every business in the world didn't have electricity in 1900. And ask yourself the question, what happened to the companies that adopted electricity? And what happened to the ones that rejected electricity? If you don't have a large asset portfolio, then you can't keep up with, you can't maintain purchasing power to buy the things you want in the future if those things are assets. And of course, they probably are. You probably want a nice house. You probably want cool things that are scarce. So this is why after the lockdown, it became very important to understand finance. You have to become much more financially sophisticated. February 8th was like a big date when Tesla announced they bought $1.5 billion of Bitcoin. Now this started hitting in the New York Times, the Wall Street Journal. It started showing up in Fortune and Forbes and everywhere in the world. And people said, well, maybe there's something here. We got to pay attention to this. Now, generally, politicians and conservative large bureaucracies will be the last to embrace this. But it ripples, right? From the visionary entrepreneurs to the early adopters to the macroeconomic investors to other investors to, first the techno media, then the mainstream media, then sparks fly, a little bit of smoke, a little bit of controversy. Now you got to have an opinion, and it's going to be injected into consciousness. I think this is part of the healing process of a free market. And pretty much the core principle of how you get rich or how you stay rich in the 21st century is you dematerialize something from the physical world to the digital world, and you make it smarter, faster, and stronger. Right, the dollar weakened by enough to drive the stock indexes up by 38% this year instead of 10%, which is the average over 100 years. So So I wouldn't make my decisions based upon decisions that take place in China or India or Nigeria. I'd make my decisions based upon the prevailing view of the regulators and the society in the Western world. And I think that's come down very hard on one point. Bitcoin is property. Bitcoin is not currency. It is not a medium of exchange. The medium of exchange function is sitting with the fiat currencies, the euro and the dollar. The store of value function is migrated into property like gold, S&P 500 index, real estate, and Bitcoin and other sorts of things you can own. And I think that's a very stable, logical development for the society.
Okay, again, give me an example of anything this scale that ever grew 400% a year. And in terms of inertia, the $1 trillion is $1 trillion of monetary energy. That means you've got more than 100 million people that have $1 trillion invested in this brand. This is the only brand in the history of the world. It's $1 trillion brand, right? It's like think about the value of Coca-Cola as the brand. In the minds of 100 million plus people, you have this idea and it's worth $1 trillion. How are you going to rip that idea out of people's heads?
A lot of people that own Bitcoin in China had to sell it in a hurry, so they had to take a haircut in order to liquidate their Bitcoin and convert back into RMB, and that caused volatility in the market. That the result is the Bitcoin network will shift to the west. It's a benefit and a windfall for the rest of the world. It's good for Africa. It's good for South America. It's great for North America. It's an opportunity for progressive miners. It's an opportunity for progressive politicians and political jurisdictions. Texas wants the mining. Why wouldn't you want the mining? This Bitcoin mining is the highest value and use of intermittent or stranded energy of any industry in the world. And so if you really want to maximize your opportunity, you want to move as much of your liquid capital as close to Bitcoin or the Bitcoin network as possible, because It is this monetary network that's going from a trillion, and presumably it could be worth 100 trillion or more, because the sum total of all money in the world is maybe $400 trillion worth of stocks, real estate, bonds, and the like. Half of that is looking for a store value, and the other half honestly truly wants to be invested in stocks or bonds or real estate. We've lost price discovery in the financial universe. So the single most accretive way to use money or time is invest in Bitcoin, because you've got a once in a lifetime, once in 50 years, transformation where all of this $200 trillion of money sitting in analog fiat instruments is being encrypted and converted into a digital instrument, which is thermodynamically superior, right? That's the first observation. Time is money. Convert your money into Bitcoin or something as close to it as you can. And the second is time. Well, any time you're spending analyzing, it's like go to Venezuela, analyze every company, every piece of real estate, every bond index in Venezuela, and figure out which ones you want to invest in. And the answer, Angelo, is it's all a waste of time. What is the right focus and what is the right frequency? So in terms of making economic decisions, I think the right frequency is annually, 1, 2, 3, 4, 5, 6, 10 years. Look at blocks of time like that. Looking at the frequency and the volatility and the returns or metrics on assets by the minute, by the hour, by the day, by the week, or by the month, even by the quarter, are all kind of noisy. Likewise, I wouldn't look at 100,000 little minute assets. I would look at $1 trillion blocks. So there's $1 trillion worth of Bitcoin. It's up 582% over a year and 200% on average. Compound annual growth rate, 200% for a decade. Those are two numbers that are valuable. There's 10 trillion in gold. It's up 2% this year and 2% on average every year for a decade. Just stop right there. That's a big insight. You can measure 1 million statistics of Bitcoin and gold, every second. They don't matter. What matters is one thing is appreciating at 2% a year and the other is appreciating at 200% a year. I think that if you want to characterize crypto universe, you have one thing, Bitcoin, which is the dominant $1 trillion crypto asset network. It's in essence, if God created gold in cyberspace, he would have created Bitcoin. It's gold in cyberspace, but it's got none of the liabilities and defects of gold. It's an encrypted block of sunlight. You can move it at the speed of light. You can program it with 1 million transactions a second. You can use it as the base layer for the 21st century economy. It's completely transparent. You can't make any more of it. It's capped at 21 million. You can take delivery of $1 billion of it in the palm of your hand or hold it in your head. Okay, so never in the history of the world did we have such a pure form of monetary energy. Our strategy is to acquire and hold Bitcoin. We're a property development company, almost like a cyber REIT. But I wouldn't invest in a Uniswap any more than I would invest in an individual stock. Like, I'm not buying, fill in the blank Uber stock. If you have like a SoftBank and maybe you would invest in Uber or Airbnb, maybe you would invest in, a mega unicorn, a big thing in the crypto space. You got to analyze it, right? Uber had regulatory issues. Airbnb had regulatory issues. A lot of crypto things have regulatory issues. I know I have a pretty good feeling for what the regulatory uncertainty is around digital property. Like, am I confident I can buy $1 billion of Bitcoin and hold it for a decade? Yeah. Can I move $1 billion of Bitcoin and not pay tax on it and not KYC it? Probably not. Is that clear somewhere? Not clear everywhere. Do I want to test that? Not really. So if you're a crypto venture, if you're a venture capitalist and you're a startup, you go the application route. And if you're a big mezzanine investor, crypto investor, and you have a higher risk tolerance and you have more capital, maybe you look at some of the bigger cryptos and the platforms. If you're a insurance company and you sell life insurance policies, and you have $100 billion worth of money in sovereign debt that's currently yielding 2% interest, and you're thinking the negative real yield is -5 or -7, maybe you want to move $5 or $10 billion of that into digital property like Bitcoin. we buy 1 billion more Bitcoin. And so today, you know, where does that end us with? Well, so today we have nearly $5 billion worth of Bitcoin. And if the money supply expands at 20% a year, that means we have a $1 billion investment gain a year. And we don't have to live in fear of the money supply expanding, because we have actually converted our company from asset poor, in essence, from a bunch of people in one of those galleys where everybody's rowing as hard as they can, dragging a 500-ton weight behind you. And we've converted ourselves into a clipper ship where nobody's rowing. Well, we're still rowing a little bit, but we're rowing with the wind now, and we've got the sails up. And if the money supply expands at 10% a year, then that's worth 500 million a year. And it expands at 20% a year, it's worth $1 billion a year. And so the strategy in essence is you can't create or protect shareholder value unless you deploy your assets in a creative fashion in the face of monetary inflation. No CEO, no board of directors, no product, no iPhone. There's no employees, so there's no one to unionize. You don't need an iPhone 12 to be competitive, because the product of Bitcoin is just the Bitcoin. And if Bitcoin just gives you 1/21 millionth of the network now, it's quite reasonable that 1/21 millionth of the network in 100 years is just as valuable, probably more valuable than one Bitcoin in 100 years is more valuable than one Bitcoin today. But you can see that one iPhone 3 today is worth nothing. Mm-hmm. And one iPhone 12 in 100 years will be worth nothing. So the product that Apple is selling isn't going to last 1,000 years. The product that Bitcoin is selling is 1/21 millionth of all the money in the world. That doesn't have to change, it just kind of has to not break. So what I liked about Bitcoin was it was a digital gold or a digital property that you couldn't inflate, and it was on a big tech network that you could accelerate using computer technology. So call it digital gold without all the imperfections of gold, but the big tech element meant that you could plug layer 2 and layer 3 applications into it, like Square Cash, Lightning, Apple Pay, Google Pay. And if I plug applications into the Bitcoin network, then I can create smarter, faster, stronger gold. This is just technology. It's better technology. All you got to do is buy it and wait. It's a paradigm shift, the first idea in 5,000 years. It's compressed air. It's electricity. It's hygienic running water. It's something new and different. If you don't understand it, then you should go and study it. You should study it because it is, in essence, strong money on a crypto network, and there's no reason it can't flip gold and go to 10 trillion and then replace most debt as a store of value and go to 100 trillion. And if it does, it's going up by a factor of 100. And if you miss it, it will be the greatest opportunity of your lifetime, and you will have missed it because you were too lazy to do the work. I think that if you want to characterize crypto universe, you have one thing, Bitcoin, which is the dominant trillion-dollar crypto asset network. Bitcoin will continue to appreciate more aggressively than other asset classes because it's the technically superior property. I see some numbers showing about 110 to 120% annual appreciation a year. And that's 10 times better than the S&P. So I think that's the best performing asset class. But, depending upon what dates, if you pick a different 10-year date, you might get a different number. So I think this is just a continual thing. Will it go up at 110% a year for the next 10 years? At some point, presumably, its growth rate slows down as the law of large numbers kicks in, and it goes from growing 100% a year to 50% a year to 40% a year to 30% a year to 20% a year to 10% a year. But I do think it'll keep appreciating over a long enough time frame. And I think it'll appreciate faster than any other choice that I can come up with, right? So I take a long perspective. And in terms of where it can go, I look at the value of gold, about $10 trillion of gold, and I don't see any reason why it doesn't flip that. And I look at 100 trillion in bonds, and I look at at the size of the global equity market, and I think 10, 20, 30% of that or more just wants to be in a store of value as a monetary index or just a property. So I think a portion of bonds, a portion of real estate, most of monetary gold, a decent portion of gold, a decent portion of ETFs. When people are putting money in an ETF like the S&P index, they're kind of just trying to save their money. I feel that Bitcoin is like fire or electricity. So the company adopts Bitcoin as its reserve asset, then the stock starts to be backed by the Bitcoin. So the best way to think about this transition is companies start to buy Bitcoin as their reserve asset, and then they have stocks that trade as derivatives of the Bitcoin. And then small countries buy Bitcoin, and then they have a currency backed as a derivative of the Bitcoin, and then larger countries. And over time, you would just think that Bitcoin becomes a larger and larger asset class. It goes from $1 trillion to 10 trillion to 100 trillion to 200 trillion. It took the human race 100,000 years to figure out fire. So like that was a slow thing. I think it took the human race 20 years to figure out electricity, or 30 years. I don't think Bitcoin will take 30 years. I think information's spreading faster, but maybe it takes another decade. Bitcoin is a bank in cyberspace with no more than 21 million units. And so what's going to happen is $1 trillion worth of Bitcoin is going to grow to be $10 trillion. And gold's going to return to its ornamental value as a source of jewelry and the like. If you know anything about tax, you know that when you move a currency around, you can't afford to incur a tax obligation. So if the IRS is going to tax you when you transfer $1 million of Bitcoin, then it makes it utterly impossible to use it as currency. I fall in the category of people that thinks the Bitcoin network is already good enough to hold $100 trillion worth of monetary energy, and we should make it better carefully and in a responsible fashion and prudently. And yeah, it should upgrade, but it doesn't need to go fast, and it's not needful of anything to be successful. So I wouldn't rush it, but I wouldn't stop it either. I would just be very careful in moving forward. I think that this is just part of the continual trend of companies adopting Bitcoin as a treasury reserve asset. Every dollar that's not invested in Bitcoin is dilutive to your opportunity, and every dollar that's not beating the S&P is dilutive to your wealth. At the end of the day, there's 21 million Bitcoin. If $1 trillion is invested in Bitcoin, that tags Bitcoin at about $50,000 a coin. When someone buys another $1 trillion worth of it, the price is going up, and then the price is going up based upon the rate of monetary inflation because it's the safe haven.